Next, joint venture accounts. In this joint venture accounts, first question: Surya bought goods of the value of rupees 45,000 and sent them to Chandra on a joint venture. Okay, there is a joint venture. There is a two parties. Okay, in these two parties, okay, one of the person, that is Surya, bought goods and that is the same goods sent to Chandra for sale purpose. Okay, it is not a consignment, it is joint venture purpose. Okay, it is here joint venture purpose. Okay, in this joint venture, okay, joint venture is one of the short term period of the business. Okay, that is partnership business, short term partnership business, we can call it as short term partnership business. Okay, it's not in a business entity. Okay, it's not follow going concern concept of the business. Okay, this is the business is not follows going concern concept. It is because of it is short term period of the business. Okay, so we can see the first one. Surya bought goods of the value 45,000 and sent them to Chandra on joint venture. It was decided that the profits would be divided equally. Okay, whatever the profits of Surya and Chandra, okay, divided equally means there is only two partners, Surya and Chandra. Equally means that is 1/2, 1/2. Okay. Next, it was decided that the profits would be divided equally. On the same day, Surya paid 2,700 and drew a bill on Chandra for rupees 18,000 and discounted the bill for rupees 17,640. Okay, means the Surya, okay, on the same day Surya drew a bill on Chandra. Here Surya is the drawer and Chandra is the drawee. Okay, Surya is the drawer and Chandra is the drawee. Okay, so this the bill is drawn for the purpose of joint venture purpose only. Okay, for joint venture business. Okay, for purchase of somewhat goods they require finance. Okay, they require money to fulfill that is of requirement. Okay, simply Surya drawn a business on Chandra. Simple one. Okay, and Surya is drawn and Chandra also is he accepted. Okay, Chandra also accepted, and finally that is bills is drawn for the purpose of joint venture. Okay, purpose only. Okay, and whatever he drawn the bill, Surya is discounted in the discounted in bank also. That is the same bill discounted in the bank. The amount is 17,640 rupees. 17,640. Okay, means actually 18,000 worth of the bill, but it is bill amount. Okay, bill realized only discounted in the bank up to 17,640 rupees. Remaining 360 rupees is less. No? That is 360 rupees here is called as discount. 360 rupees is called as discount. Next, on receipt of the goods, Chandra paid carriage of rupees 900 and insurance 1200 rupees. Here Chandra paid carriage 900 and insurance 1200. Surya received an account sales showing that the goods had realized rupees 76,500. Here Surya received an account sales showing that the goods had realized, means here goods sold by Chandra, and that is the same details is received by Surya from Chandra. Okay, and finally it is goods sold by Chandra. Okay, and pass necessary journal entries and prepare the necessary ledger accounts showing the results of joint venture in the books of both the parties, assuming that the final settlement was made. Okay, between two parties, is there any balance is there any balance amount? Okay, both of us is settled, that is the amount. Okay, that is only the joint venture account. Okay, now in this clearly it's mentioned showing the results of joint venture in the books of both the parties. Both the parties means there is two parties here, that is Surya and another party is Chandra. One party is Surya, another party is Chandra. Okay, so in the books of Surya, first of all we can okay, prepared the ledger accounts and journal entries in the books of Surya. Okay, and finally these books we can call as when separate books are maintained. Okay, separate books are not maintained, okay, by the organization. Okay, if it is separate books are not maintained by the organization, then how to prepare the ledger, journal entries and ledger in the, okay, in the books of Surya and Chandra. That is only we can follow now. Okay, in this first one, solution. When separate set of books are not maintained, okay, in the books of Surya, journal entries. In the books of Surya, we should be prepared journal entries. Okay, in this first one, okay, we can go through as per the question. First one, Surya bought goods, the goods value of the rupees 45,000 and send, okay, 45,000 and send them to Chandra on joint venture purpose. Okay, here we have to write, okay, Surya bought goods. Okay, so he purchased good for the purpose of joint venture purpose. Okay, joint venture with Chandra. Okay, so joint venture is follows nominal account. Nominal account rule is all expenses and losses debit and all incomes and gains credit. Okay, so here whatever the purchase of the goods, okay, that we should be debited. Okay, means here joint venture account instead of somewhat particular nature of the expenditure, we should be debited joint venture account. Okay, here actually if it is a purchase of the goods, okay, the original entry is purchase account debit to cash account. Okay, because of we are preparing the books in the books of Surya. Okay, Surya only purchased here, that is to bank, but instead of the nominal account place, okay, nominal nature of the expenditure place, we should be fulfill that, we should be write joint venture account here. Okay, joint venture account, so that is joint venture account. 2, in the books of Surya, okay, Surya only purchased na to bank account, then you can write bank account. Okay, so the amount is 45,000, being goods purchased for joint venture with Chandra. Okay, that is only the narration. Next, on the same day, Surya paid 2,700 and drew a bill on Chandra for rupees 18,000. Okay, and discounted the bill for rupees 17,640. That's we can write. First of all, we can write the same day paid 2,700. Okay, for to meet the expenditures. Okay, so he paid for joint venture purpose only, no? Joint venture account debit to bank account. Okay, the amount is 2,700 and 2,700. So write narration being, that is being expenses paid for joint venture with Chandra. Okay, the amount is 2,700. And next one, bill drawn. Okay, so to the point of Chandra, Surya, it is bills receivable, and to the point of Chandra, it is bills payable. So third entry is bills receivable account debit to, so the bill drawn by Chandra, no? Chandra account. Okay, bills receivable. Okay, if you read bills of exchange chapter, it will be clear. Before going to joint venture and consignment, first of all you should be read bills of exchange chapter. Okay, there is bills receivable account debit to Chandra account. The amount is 18,000. Okay, the narration is being bill drawn by Surya on Chandra. Okay, that is only the narration. And after that, on the same day, whatever the bill is discounted in the bank for the rupees of 17,640. If it is a bill discounted in the bank, the entry is bank account to debit. The amount is 17,640. Next, discount is the last, na? Debited it. Discount account to debit. That is 360 rupees to bills receivable account. The amount is total 18,000. Okay, the narration is being Chandra's bill discounted in bank. After that, whatever the discount, okay, this is the 360 rupees. Okay, actually bill drawn for the purpose of joint venture purpose only. Okay, this bill actually both are responsible. Okay, and whatever the discount on the bill, discount of 360 rupees, okay, it should be bear by joint venture. Okay, means it is also one of the business expenditure. Both of should be bear this is a discount equally. Okay, so hence it is expenditure, na? So simply you can debit it joint venture account debit to discount account. So 360. This is also one of the expenditure loss to the organization. Okay, hence whatever the expenses and losses should be debited to joint venture account. Simple one. Okay, so the narration is being discount on bill charged to or debited to, okay, debited to joint venture account. Okay, being discount on bills or discount on bill, it is charged to or debited to joint venture account. Okay, simple narration. After transferring of the discount, okay, next one is on receipt of the goods, Chandra paid carriage, that is 900, and insurance 200. Okay, total both of expenditure to the Chandra. Okay, now here Chandra paid expenses, then simply you can write Chandra name. So finally these two transactions are expenses. Okay, then simply you can debit the joint venture account debit. Joint venture account debit to who has paid? Chandra. Okay, it is paid by Chandra, so you can write Chandra's name. Chandra's account. The amount is 1200 plus 900. The total amount is 2100. Credit also 2100. Okay, the narration is being expenses paid by Chandra. That is only the narration. Next one, after this expenses, next one, Surya received an account says showing that the goods had realized for rupees 76,500. In this one, that is the goods sold by Chandra only. Okay, If it is a goods sold by Chandra, then if it is a goods sold, that is an income to the organization. Okay, if it is an income to the organization, we should be credited to joint venture account. So what we should be debited means who has sold? The sold by Chandra. So debited the Chandra. That is Chandra's account to debit to joint venture account. Joint venture account. Incomes we should be credited. Okay, should be remember everyone. Okay, Chandra's account debit to joint venture account. The amount is 76,500. 76,500. 76,500. The narration is being goods sold by Chandra. Goods sold by Chandra. Okay, like this you can write narration. After that, the place is required for more 3 entries. That is joint venture profit. Okay, transfer to that is co-venturers. That is Surya and Chandra. And after that, after preparing co-venturer account, that is Chandra account, whatever the balance, okay, it should be settled. Either it is receipt or payment. We should be settled. That is the amount also. Okay. So now we can prepare ledger accounts. That is joint venture account and Chandra account. Next, in the books of Surya, that is joint venture account. In the books of Surya, joint venture account. Okay, this is the joint venture account, and also we should be prepared Chandra account also. Okay, this is the ledgers. Actually, we can prepare directly. Okay, that is the directly method we can discuss in next question. Okay, in this question he asked the journal entries. Now we can go for journal entries. Okay, so see once. So first one, joint venture account to debit to bank account. Joint venture account to debit to bank account. So you can go to the joint venture account and debit side right to bank account. Because of joint venture account, there is in the debit side in this entry. So you can also write debit side in the ledger. Okay, what is the amount? 45,000. 45,000. Okay, but in the particular column we should be write what is the opposite side of the one. Okay, what is the opposite side of that is the particular transaction. So if it is a debit, if you write as a debit, we should be write credit, whatever the credit in that side. And if you write credit, okay, and whatever it is in the debit side, that is only we should be right. Okay, and bank account, no need to prepare any bank account because of it is personal, not maintained. It's actually separate set of books, not maintained method. Okay, no need to prepare any bank account. Next, joint venture account debit to bank account. Okay, here also somewhat expenses paid by Chandra. Okay, that is same joint venture account to bank account. To bank account. The amount is 2,700. 2,700. Okay, so this is the expenses. This is the purchases. Okay, this is the expenditure and for purchases. You should be write clearly. Okay, and the next one. Third entry is bills receivable account debit to Chandra account. Okay, so go to the Chandra account. Okay, Chandra account and write. We cannot prepare any bills receivable account now. So go for the Chandra account. So Chandra account credit side by bills receivable account. Bills receivable. The amount is bill has written worth of 18,000. With the bill worth of has written 18,000. Next one, bank account debit, discount account debit, bills receivable account. Okay, in this one, so there is no debit and credit is not related to our two ledgers. So no need to enter any one in this ledger. Next, after that, next one, joint Fifth one, joint venture account debit to discount account. Joint venture account debit to discount, because of that is a discount is transferred to joint venture. So go to the joint venture account and write to discount. Okay, joint venture account debit side to discount account. 360. Okay, and after that, sixth entry is joint venture account to debit to Chandra account. Okay, joint venture, go to the joint venture account and write to Chandra account. To Chandra account, that is 2100 rupees expenses paid by Chandra, and here you can write by joint venture account there is the same amount you can credit it to Chandra account as a joint venture. Okay, that is only the next one. This all 6 entries completed. Next, seventh one. Seventh entry is Chandra account to debit to joint venture account. Chandra account, that is a goods sold, na? So write debit side of Chandra account to joint venture. Okay, debit side of Chandra account to joint venture account. This is a goods sales, no? So okay, you can write small. This is for expenses. Okay, the amount is 76,500 rupees. Okay, next one, after this all those ones, and these are sales, no? Sales is the income to the joint venture. So by Chandra account sale 76,500. Okay, first you can close joint venture account. Okay, and whatever the profit of the Chandra, you can transfer to Chandra. Okay, so the credit side is more, that is 76,500 and 76,500, and the total profit is the total 26,340. 26,340. That is, you can write profit transfer. How much? 26,340. 26,340. This is the profit should be transferred to profit and loss account. Profit and loss account. Okay, this is a share of Chandra. Oh, sorry, share of Surya. That is 26,340 into 1/2, which is equal to 13,170, and 2 Chandra's share, you can write Chandra account. The calculation is 26,340 into 1/2. Okay, which is equal to 13,170. Okay, if you add these two amounts, then it is 26,340. 26,340 rupees. Okay, so whatever the Chandra's profit, whatever it is a Chandra's profit, you should be credited to Chandra account. So that is, you can write by joint venture account. Joint venture account, that is, you can write profit amount is 13,170. Whatever the share of Chandra's, okay, you can transfer to Chandra account. Now you can close the Chandra account. Okay, now you can close Chandra account. 13,170, 2,100, 18,000, and the debit side is 76,500. Debit side is more. Okay, debit side is more. That is the reason the debit side of amount, whatever the amount, you can write two sides of the ledger, and the balance is by bank account. That is, amount is 43,230. Balancing figure. Okay, that is only the amount is settled. Chandra has to be paid here. Okay, that is Chandra account to debit to bank account. Okay, for this profits you can write one of the entry. Okay, whatever the joint venture profit, one entry you can write, that is joint venture account to debit to profit and loss account to Chandra account, 13,170. That is 8th entry. Joint venture account to debit to debit to whatever the Chandra profit you can write, whatever the Surya's profit you can write to profit and loss account, that is 13,170. Okay, and to Chandra's profit you can write his name, Chandra's account, 13,170. So debit side is 26,340. Right narration being joint venture profit share shared equally. Okay, whatever the joint venture profit, share equally. Next, whatever is the balance of Chandra. Okay, from Chandra has to settle, that is the amount, na? Means we received the amount from Chandra. Okay, so that is only the one you can write. So 7th, 8th, 9th entry, bank account to debit to Chandra account. The balance of amount is 43,230. 43,230. Okay, right narration being balance of Chandra's settled. So whatever the balance of Chandra, okay, he has settled that he's okay. That is only the journal entries and ledgers in the books of Surya. Okay, in this question he clearly he asked that we should be write journal entries and ledger accounts in both the parties. So now we can prepare. In the books of Chandra, we have to write journal entries as well as ledgers also. That is joint venture account and Surya account. Okay. Finally, you can see whatever it is the Surya's expenses, you can write to bank. Okay, to bank and so on. Okay, to bank and to discount and so on we have written. Okay, whatever is the Chandra's expenses, we have written Chandra's name. Okay, and Chandra only got income, no? So he only goods sold, so we have written Chandra account. Okay, so just whatever it is here, just coincide of the in the books of Chandra. Okay, another co-venturer. So is there any, if it is if you prepare any accounts in the Chandra, in the joint venture account, whatever the Chandra's expenses, we have to debit it to bank account or to commission account. His commission, is there any commission to commission account? If it is his expenses, to bank account. If his income, by bank account. Okay, but is there any Surya's expenses? We should be write his name, that is Surya. Okay, Surya's account, we should be transferred to Surya account. That is only the difference of the one, nothing. Okay, same expenses we had to write there only. Okay, now next, in the books of Chandra, journal entries. Okay, journal entries. Okay, we can read question again. Surya bought goods of the value of 45,000. Okay, Surya purchased the goods. So whatever the anyone, Surya purchased the goods, no, it is expenditure to the joint ventures, so debited the joint venture. Joint venture account debit to Surya account. Surya account. First one, the amount is 45,000 and 45,000. Okay. Next, second one, it was decided that profits would be divided equally. On the same day, Surya paid 2,700. Okay, so Surya paid expenses. So joint venture account debit, it is expenditure, no? So debited to joint venture account debit to Surya account. Surya account. If it is paid by Chandra, we should be write to bank account. If it is paid by Chandra, another co-venturer, okay, if it is paid by co-venturer, then we can write his name. So that is to Surya account. The amount is 2,700, 2,700, 2,700. Narration is being cash paid. Okay. That is expenses paid by Surya. Okay, that is only the narration. And drew a bill on Chandra for rupees 18,000 and discounted the bill 17,640. So drew a bill means Chandra is the drawer, Surya is the drawer, and Chandra is the drawee. So is a Surya point of it is a bills receivable, and Chandra point of it is bills payable. So you can write, if it is a bills payable, that is entry is Surya account debit, Surya account debit to bills payable account, bills payable account. The amount of the bill is 18,000, 18,000. So the narration is being Surya's bill accepted. Okay. And the fourth entry is, and the bill is discounted in the bank. So discounted by Surya but not Chandra. So there is no entries in the books of Chandra for discounting in the books. Okay, discounting the bill. Okay, discounting the bill in the bank. But whatever it is a discount amount, okay, we should be debited to joint venture account. That is paid by both the co-venturers. So write joint venture account debit, joint venture account debit to Surya account, because of that is a bill discounted by Surya, hence that is only the reason you can create it to Surya account. Okay, being discount charged to discount on bill charged to joint venture account, joint venture account. It's not a personal bill. Okay, it is joint ventures account, business related bill. Okay, but it's drawn on personal way. Okay, but it is a draw for the purpose of business, that is joint venture purpose. So that is the reason whatever is a discount amount you should be debited to joint venture account. After that, fifth one, on receipt of the goods, Chandra paid carriage 900 and insurance 200. Chandra's expenses. Chandra's expenses mean anyhow whatever the expenses you should be debited to joint venture account. Joint venture account debit to, we are preparing journal entries in the books of Chandra. Okay, and that is expenses paid by Chandra. Hence you should be created to bank account but not Chandra account. Okay, in the books of Chandra we can't write Chandra. Okay, so we should be created to bank accounts. The amount is 900 plus 1200. Total amount is 2100, 2100, 2100, 2100 being expenses paid for joint venture. Okay, that is only the fifth entry. Next, the sixth one, Surya received an account sales showing that the goods had realized 76,500 gross amount. Okay, that is finally Surya Chandra only sold, no? Okay, so debited the bank account because of he received bank account to debit to joint venture account. It is income to the organization. It is income to the organization, hence you can credit it to joint venture as per nominal account rule. Okay, that is 76,500 amount, 76,500. Right narration being goods sold for joint venture. Okay, here the goods sold by Chandra only. Okay, next one, left somewhat space for preparation of ledgers. Okay, next in the books of Chandra. Okay, in the books of Chandra, joint venture accounts, that is to first entry is joint venture account debit to Surya account. So joint venture account there is in the debit side. You can also write debit side to Surya account. Surya's account, that is 45,000. Okay, and go to Surya account and credit side in the Surya. Okay, Surya, right, by joint venture account. 45,000. Okay, next one, joint venture account debit to Surya account, that is Surya's expenses. Okay, so joint venture account again debit side, this is purchases, no? Purchases, okay, to Surya account. This is expenses, 2,700 amount, and here also by joint venture account, expenses 2,700. Okay, next one, Surya account debit to bills payable accounts. Okay, in this entry there is no joint venture, so no need to write any transaction in the joint venture account. So directly you can write Surya's account in the debit side to bills payable. Accounts, that is the bill amount is 18,000. Okay, next one, joint venture account debit to Surya account, that is a discount. Okay, the discount is charged to Surya account, that is discount 360, and go to the Surya account and write credit side by joint venture account, $360. Okay, by joint venture account 360. Next, after joint venture account debit to bank account. Okay, go to joint venture account and write debit side to bank account. That is expenses 2,100. 2,100 amount. Okay, next, bank account debit to joint venture account, that is a goods sold by Chandra. Okay, So joint venture account credits it by bank account, sales, okay, 76,500. Okay, that is only the maximum transactions in the books of Surya. Okay, and first we should be compute profit or loss in the joint venture. Okay, profit or loss. Okay, first of all, so whatever the profit of Surya, right, to Surya's account, 76,500, 76,500. So the difference is same as amount, that is 26,340. 26,340 into 1 by 2, half of the one. So that is 13,170. So whatever the Surya's profit, you can credit it to Surya account by joint venture account, 13,170, and the remaining balance of the profit you can transfer to profit and loss account, that is 13,170. Okay, so now you can close Surya's account. Okay, Surya's account credit side is more. The total amount of credit is 61,230. 61,230. Okay, now you can write debit side to bank account. So whatever the balance of the Surya, we have Chandra has settled it. Okay, that is balancing figure amount is settled by Surya. The balance amount is 43,230. Okay, that is only the completion of the one. And also one more is there, that is whatever the profit and balance of Surya, balance of Suryas, we should be right journal entries. Okay, so don't forget it. Okay, maximum students can be forget in the examination. Okay, the examiner should be verify these are the entries. Okay, for profit entries and balance of Surya's account amount also. Okay, so the entry, seventh entry is joint venture account debit, to Surya account, that is 13,170. Next to profit and loss account. So whatever the profit of Chandra, we should be right profit and loss account, because of we have written in the books preparing books in the books of Chandra only. Profit and loss account 13,170. Okay, equal profit sharing ratio. Total amount of profit is, that is 26,340. 26,340. Okay, so narration is being share of profit transferred to Surya. Okay, that is only the narration. Next, eighth one, whatever is the account balance of the Surya, we should be settled now, that is to bank. Okay, we should be settled as a check or so and so on. So this entry is Surya account debit to bank account. Surya account debit to bank account. The amount is 43,230. 43,230. the narration is being balance of Surya account settled. Okay, that is only the last entry. Okay, like this you can prepare general entries in the books of Surya, Chandra, and preparing in the ledger accounts of joint venture account and the Surya account. Okay, and if you have any more doubts, okay, so please be contact with my WhatsApp number, that is 74168 62278. Okay, 74168 62278. Maximum I can contact with you in WhatsApp or live classes also. Okay, and if you want any PDF material also is available, just you can send with the chapter name. Okay, with chapter name and your class, whatever you are studying, and your name. Send me your details, and with your WhatsApp number I can send to you your contact number. Okay, as a PDF format also, whatever these are the questions and answers also. Okay, thank you.